Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. Hopefully, this will be a nice 10-minute summary of what we're seeing in the market today, and maybe a couple new ideas for you to chew on. As always, we should start off with our conversation about the US dollar index, since it sort of is the big bus driver. And you can see we talked recently about this potential weekly empire formation coming in and how we were going to watch this low here. 97.03 very closely. Some econs did come out today, and actually they showed that inflation rate's actually a little bit stronger than what consensus was looking for. You can see we had core inflation rate year over year, core month over month, and also the inflation rate month over month. And they all came in just slightly higher than expectations, which, if anything, I think for the Fed and the prospects of the market heading into a deflationary spiral, I think that's put that conversation on pause for a bit. And so as a result, we actually have a bit of an uppy US dollar index this morning. Obviously, the week is still young, so we don't really know how this is going to play out. But as it stands, if we lose this 97.03, that empire fires and back down we go, probably means risk off kind of scenario, and all of our sort of risk proxies will continue working their way higher, the risk off proxies, that is. However, if we can inside bar here and actually next week tick up through whatever the high of this week is, then that actually becomes a buy signal. So interestingly, how heading into that Fed meeting recently, we had this really big coil developing. Actually, I can't show you here. My chart's a little screwy, but I think it was along the lines of something like that. The market tried to break out through the upside, came back, it checked this gap, and in essence, if we lose, of course, trading, we put that right on there. If we lose this empire low, then we're probably going to head back down to these lows and maybe even explore lower. But I might make the argument now, just in the short term, now that the Fed is out of the way, that really we have a very, very sharp consolidation looking something like that. So if we lose the empire top, then probably going to test the bottom of this little up channel, and really you could make it that steep if you wanted to. If we inside bar and break out higher, then wicks and tails like to be eaten. There's lots of room upside, and higher highs and higher lows basically define a bull market. I hate to say it, but I'm still thinking up on the US dollar. If we move on over to some of the fear proxies, sort of risk off trade, if you will, they all got kind of bitch slapped overnight. And in the daily brief, we talked a little bit about how I do remember yesterday we talked a little bit about how the yen didn't really set up a top here because we made a new high. And what was that top, if it was going to look like? What would it look like? And gee whiz, this is right through the London kill zone, right through the London open there. And we say that 70% of all trends established often occur through the Tuesday, Wednesday London kill zones for the week. And so I think this was a trap that was set last night. And that's actually a very beautiful little double top breakdown there. And as always, like we say, if you ever see the market smiling at you, get ready. And boom, the market smiled and it dumped hard. Now, the interesting thing about this is that they dumped it right into 38.2s. Interesting, too, also to see that the algo is now actually starting to get interested on the bear side. Don't think I could really justify taking a trade here. And as you can see on this sort of head and shoulders kind of thesis, I'm looking for a little bit of a counter trend rally off of 38.2s. Wicks and tails like to be eaten. Candle body levels. I talked to you guys lots about candle body levels. I think that was a pretty important trade location down in here. So I'd be looking for a little bit of a counter trend rally here on yen. But a really good example of, obviously somebody caught wind of the inflation numbers ahead of the actual release. They saw this coming, and probably if we do things like pull up this Japanese yen on a futures chart, my hunch is we're probably going to see a nice big fat divergence up top there. Yep. So you can see actually it started to go into divergence here. Willie was stupid. And now this break here has completely confirmed that divergence. As well, too, you can really good example of the bears waking up and taking control of this market. I mean, one hell of a trade there, but you had to be light on your toes, no doubt about it. So, we often say that currencies lead everything. So it really shouldn't surprise us that, yen, and you've heard me talk lots and lots about gold, yen-gold relationship. I don't think it should surprise us that the gold market came off a chunk here. What was interesting about this trade, of course, is that I thought it set up actually a pretty interesting looking short. They had one more FU move to do, and then the dump came. Interesting too, though, you can see this candle body low, and keep in mind this is a 4-hour chart, so it's not daily, but this 4-hour chart candle closed 1497. This candle's a low 1496.40, so we can't call this an inside bar. At best, this could be a bull rammy. But you notice they've left a bit of a wick up top here. Let's see how this inside bar resolves. My hunch, especially considering what the way the yen looks, is we roll over, but you never know in this crazy game. And I suppose just like the yen, we really should expect 38.2s to be tested here. So let's see whether we get another dip. Regardless, on this chart setup, I think you actually make the argument this is a megaphone. So we go boobity boo, and we go boobity shmoo. So really right now, if anything, what we want to see, ideally to set up a trade, now that we're getting things like divergences and stuff confirmed, and let's go just for argument's sake, let's take a quick boo at that gold. Yeah, you can see the divergence now off of these peaks. It wasn't the prettiest one, not the cleanest one. Willie was nice and stupid. This rally up to new highs here, massive divergence. So, at the very least, what I'll just simply say, and it's the same message I said yesterday, there's no way I could be a buyer up here. Now I have to sort of let this thing settle down. And, if the sellers do step up, and just like the yen, you can see the sellers, the bears came awake here. So if the sellers do step up here and take over this market, Willie stupid, bear div potentially coming in, maybe even a divergence on OBV, then we're going to finally get that correction that I've been sort of looking for here. And on the gold market, just eyeballing this, you can see reload zones somewhere between about 13 and a quarter and 13 and 3/4. That's where I'd be looking for a pullback here, but still a little too early for us to get too aggressively short. We did have a little head fake short that got stopped out. So long and short of it here is now we're just waiting for this diamond to sort of resolve itself. And you can see on the risk off assets, they are all sort of topping out. They don't really clearly show on this chart. I did show in the broiler chicken show here. This is a sort of a zoomed in look at the correlation. This is bonds, yen, gold, Bitcoin, all on down on the day. And then on the flip side, what's the growth proxies, risk on, stocks, and oil. And you can see oil's having a pretty good day. And we've talked to you guys about this at length before. Very difficult for gold to actually move up with oil moving up at the same time. Usually they move in opposites, so not a big surprise. Gold's coming off here a bit, and oil's catching a nice bid. So that's basically this conversation about these two charts. I always like to give you a couple ideas to chew on here. First, on the long side, I think I mentioned this yesterday, but I can't remember specifically. But one of our site members have been following this stock pretty closely. I think you could make the argument we have nice little W's coming in here. This is a daily price chart. You can see the W's here. Did leave a little bit of price gap, so I don't know whether it's such a great idea just, going balls to the walls. But any kind of pullback down into here, especially to fill in this gap, I might be very interested in this name. It's got 27 million out, pretty healthy price to book, pretty healthy price to cash. The only thing I don't like about this stock is that insiders aren't really that long. But just on a pure technical basis, if the broader market is relatively sanguine, I think you could see pharmaceutical stocks and healthcare stocks catch a bit of a bid. And you can see, from 50, 60 cents here, 50% levels is $1.53. That's like a triple. That's not bad at all. So this is an idea that I'm definitely chewing on. So there's something for you to take a look at. Do your own due diligence. I'm not making any recommendations. This is what I'm doing with my money. What you do with your money is entirely up to you. On the flip side, remember I said off of this gold chart, there's no way I could be a buyer of gold. But this is a name that I've been interested in for a while. Alio Gold, it's a sort of a mid-tier producer. And you can see if we do things like reload zones, I thought this was just an excellent working example of how I would consider pullbacks into support as sort of buying opportunities in the gold space. I think you can make an argument both directions, right? We had, in essence, absolutely textbook, rally into reload short zones. So it shouldn't surprise anybody to see this thing stall out up in here. And then conversely, if I wanted to be a buyer, hopefully everybody can see this big old honking gap down here. Really the last sort of key support is that low and then all the way down at the bottom. So I'm looking for some sort of stab into reload zones. Give me a nice W, and then I can start thinking about buying this back. And just full disclosure, I've got stink bids working on this gold name in particular right down at the bottom here. As well, too, another anecdote that, we should pay attention to if you ever see the market smiling at you, then it probably means it's getting ready to take your money, and you can see AB equals CD where we're just slowly working our way back down. So here's just a really good sort of visual demonstration of why I couldn't buy the gold and the gold stocks up top here. And if I wanted to buy gold and gold stocks, where should I be concentrating on? And, this Alio, for example, I really like the idea of working bids down here at 80 cents. Okay, I think that's basically your summary. We'll finish off just with a quick boo at good old Bitcoin. As one of the risk-off proxies, I think, it doesn't surprise me at all if stock market's feeling a little bit better, crude oil market's feeling a little bit better, gold, yen, bonds kind of weak. Doesn't surprise me at all that Bitcoin's a bit weaker. The only thing that actually disappointed me about this was just the fact that, the bonds, the gold, the yen all pushed to new highs, but Bitcoin didn't. But if we look at this chart, everybody should look at it and go, actually, this makes perfect sense what happened here. So we had a top of the range, good old mountain man, stopped the bull in its tracks as well. This happened to be also a trend line resistance line. So market rallied up and then failed off of it and is starting to work its way back down. Sitting 10,850. Could we see a pullback and test these lows? Wicks and tails like to be eaten. Basically, I've made the argument this is the top end of the range, this is the bottom end of the range, and now we're starting to work our way back down and sort of clean up the chart down here. So not really anything shocking here. Algo-wise, we had a bunch of uber bear signals come in here on the corn here overnight. Stamp chart's probably the best one to work off of here. And of course, remember there's mountain man level, and then we talked about reload zones within reload zones, just absolute sick level. Here you can see the algo came alive. We had a bit of a bull divergence come in through here, so I just sort of said, if you are a bull, you got to just let things calm down. If you did take this short, then you're just in the short and you're risking against the highs. You can see we M'd out here, and what's really interesting off of this is this was the predominant trend line that I was following for things like LJ setups. And notice how we never did W out on the other side of this trend line, and even overnight, the market tried desperately to resolve that trend line and lost it. So we made new lows. This algo signal in itself, the 2-to-1 defaults, looking for 10,600, big fat round number. We could do AB equals CDs, which looks like the market's taking price back against these lows here. So let's see how we do here. Long and short of it here, For those people that were bullish, we were watching potential bot setups, and it looks for 3 higher lows. You can see the third low never did come in. These 2 recent lows were broken, so the bots had to restart its count, and we're back at a new one here. As long as we hold 66%, then the bot technically is still alive. But I'll tell you, she's looking more and more doubtful by the day as we sort of work our way through here. And it's going to take a lot of cleaning up here before I can get back on the bull side. Okay, I probably talked way too much, but hope you've enjoyed the offering here today. All the best, and bye for now.